I think the best risk-adjusted returns in crypto remain with something like Bitcoin because I think the risk of it losing is very low. It has a dominant position in the store of value market. It has strong moats around that position. And I think that is a market that could 10 or 20x in the next decade. So I think from a risk-adjusted basis, Bitcoin is very hard to look past. If you're looking for like the highest potential return at a reasonable risk, I think Solana is extremely attractive as well. Solana is sort of playing in the space of stablecoins and tokenization. It doesn't have the same level of market share that Ethereum does. Ethereum is the leader, and I'm bullish on Ethereum, but it has very interesting technology and it's gaining market share in two very fast growing spaces. And it's at a relatively low valuation right now, right? Sub $100 billion. So I think Solana has many multiples of upside if it really executes well in 2026. Bitcoin doesn't have the same rocket ship potential, but it has much less risk and is also attractive.
Hougan argues that 2025 wasn't weak because crypto failed. It was weak because too much demand was pulled forward. The post-election rally created an early surge in enthusiasm. Investors positioned aggressively ahead of regulatory optimism and macro tailwinds. Meanwhile, companies like MicroStrategy traded at massive premiums, effectively front-loading future demand for Bitcoin exposure. This meant that by the time 2025 arrived, a lot of the buying that normally would have occurred later had already happened. Markets needed time to digest those gains. Even so, Hougan admits he was surprised by just how low prices stayed, especially considering the scale of institutional adoption. Universities, sovereign wealth funds, financial advisors, and retail investors all over the world were allocating to crypto. Yet prices refused to respond.
I think what we got wrong thinking about crypto as we moved into 2025 is we underestimated the amount to which long-term crypto holders would sell as Bitcoin got toward the $100,000 level. And $100,000 is a big behavioral hurdle. It's a big round number. And what we saw is every time Bitcoin peaked its head above $100,000, the OGs in the space would sell and the price would fall down. And I think that selling sort of kept the price down. People were worried about sort of the 4-year cycle repeating. So anyway, the fundamentals were great and the price didn't catch up. I think in 2026, we're going to see great fundamentals and very strong price performance. I think the post-election rally pulled some of the price demand forward, and then we had to work that off. You also had things like MicroStrategy trading at significant premiums. That also pulled demand forward. So to some extent, 2025 sort of made up for 2024. But look, it was a disappointing year. I am surprised that prices are as low as they are, considering the scale of institutional adoption that's happening. Eventually, I think that institutional adoption overwhelms the forces that have been keeping the prices down, but it didn't in 2025, and it could still take some months before you really see it. You know, I talk about us entering a 10-year grind in crypto, a 10-year grind where prices go up, where I still think Bitcoin and crypto is the best performing asset class in the world, but where we don't see the type of 200, 300, 400% price increases that we saw in the past. As you mentioned, it's a $2 trillion asset. That's a big deal, right? If it were a company, it'd be one of the 10 largest in the world just for Bitcoin. So it's going to take more effort to push it up. But make no mistake, I think Bitcoin could easily, it could exceed $150,000 this year. It could have a 50+% year. It could go substantially higher than that. But if you're coming into the space looking for 1,000% returns, you're probably 5 or 10 years too late. The most important is the passage of pro-crypto legislation in Congress, because the other regulatory changes could shift if there's a new administration. When you get legislation passed, it's a really big deal. So looking back to last year, we saw the passage of legislation that made stablecoins effectively legal and usable in the US. Stablecoins are digital dollars that move over a blockchain. There's a major real-world use case. I think the passage of that legislation ensures that there's going to be a 10-year boom in stablecoin asset growth, which will be supportive for the crypto assets that those stablecoins move over, like Ethereum and Solana. So I think it's really that legislation passage that was the biggest win last year. There were a lot of wins, but that one really stands out. Well, look, the biggest use case is of Bitcoin as a form of digital gold, a way of storing wealth in a digital format without a government or a bank. That's a $2 trillion use case today. And that's being used by everyone, as I mentioned, from Harvard to the Abu Dhabi Sovereign Wealth Fund to thousands of financial advisors to mom and pop investors everywhere. So we shouldn't overlook crypto's OG use case. I do think stablecoins as a digital upgrade to dollars and tokenization as a digital upgrade to how stocks, bonds, and other assets move around the world, those are multi-trillion-dollar use cases that are really still in their early phases of growth. But we're seeing even more. We're seeing the growth of prediction markets, which are often powered by by crypto-backed rails. We're seeing the growth of smart contracts, which are powered by crypto-based rails. My view, Sumit, is that eventually all finance is going to move over crypto and public blockchains. So everything that we do in traditional finance and asset management is moving into the crypto era. Stablecoins and tokenization are early, obvious examples of that, but there are many more examples to come. We're going to see, in 2026, the growth of something called vaults. Vaults are like automated mutual funds running on blockchain-based rails where users can contribute their assets and then they are deployed into investable strategies. I think that could be $100 billion space in a few years. So certainly these early examples of tokenized funds have found real traction with billions of dollars in assets, but I think it could be tens and hundreds of billions in the next couple of years. A thing that's true in crypto is that as you go down the market cap spectrum, your risk increases exponentially. So there's not a linear relationship between Bitcoin's risk and the risk of the 20th largest asset. It's a exponential relationship where the 20th largest asset is so much riskier. So we are going to see hundreds of these crypto ETPs launch, and mostly investors should ignore them. Just like in the equity market, most of your money is in Vanguard total market, and then maybe you have a little bit of your money in thematic exposures. In crypto, most of your money should be in a large cap diversified crypto index fund, and then you should have a little bit of money that lets you speculate on some of these really exciting small cap coins. But you should understand that what you're doing in that part of the portfolio is speculating on very risky assets. My family growing up had a Betamax. I remember MySpace. I remember when Amazon.com and Pets.com were similar sized companies. It's very hard in the development of any early technology to know who will the winners be. And you would hate to bet on crypto, have crypto 10x, but have bought the wrong asset and have missed out. That's just like a painful position to be in. So particularly for advisors who have very little time to think about this space, why not just own the index, right? The old Jack Bogle advice of don't find the needle in the haystack, buy the haystack, is very true in crypto, which is an area where I think the haystack could 10x over the next 10 years. That'd be phenomenal for your portfolio. Why try to 12x when if you pick the wrong needle, you're going to, negative 100% you're exposed. Like just buy the index. It makes it so easy.
One of Hougan's most practical insights is about risk. Crypto risk doesn't increase linearly. It increases exponentially as you move down the market cap spectrum. The 20th largest crypto asset is not slightly riskier than Bitcoin. It is dramatically riskier. That's why Hougan advises most investors to treat crypto like equities. Most capital in a diversified large cap index. A small allocation for speculative bets. He compares it to Jack Bogle's famous advice. Don't look for the needle. Buy the haystack. Crypto as a whole could 10x over the next decade. Why risk missing that by betting on the wrong project?
Well, the interesting thing about Dogecoin is it's kind of the anti-meme coin, right? Like the criticism people have of meme coins is that they're flashes in the pan, they come and they go, and they're often controlled by insiders who profit at the expense of the public. Dogecoin was the first meme coin. It actually launched in a fair manner. There are no insiders in Dogecoin, and it's been around for a decade. So, it has proven that there is a community of people who love this asset and who have loved it for 10 years. I suspect that they will continue to love it for the next 10 years. Not most investors shouldn't buy our Dogecoin ETF because most investors don't need exposure to Dogecoin. But if you do and you want to buy it in an ETF, Bitwise wanted to provide a wrapper that was high quality, low cost with great custody. And that's what we did with BWOW. Again, it's not for everyone. It's just if you are searching for a Dogecoin ETF, we thought there should be a great solution for you. And so that's why we built it. I think the best risk-adjusted returns in crypto remain with something like Bitcoin because I think the risk of it losing is very low. It has a dominant position in the store of value market. It has strong moats around that position. And I think that is a market that could 10 or 20x in the next decade. So I think from a risk-adjusted basis, Bitcoin is very hard to look past. If you're looking for like the highest potential return at a reasonable risk, I think Solana is extremely attractive as well. Solana is sort of playing in the space of stablecoins and tokenization. It doesn't have the same level of market share that Ethereum does. Ethereum is the leader, and I'm bullish on Ethereum, but it has very interesting technology and it's gaining market share in two very fast growing spaces. And it's at a relatively low valuation right now, right? Sub $100 billion. So I think Solana has many multiples of upside if it really executes well in 2026. Bitcoin doesn't have the same rocket ship potential, but it has much less risk and is also attractive. Well, I think we don't know for sure, right? So it could benefit stablecoin issuers like Circle. It could benefit platforms like Coinbase that host a lot of stablecoin assets. It could benefit Solana and ETH on which those assets are issued and traded. What is true, Sumit, is that every time you move a stablecoin, you have to pay a fee to the underlying network. That fee is relatively small, but if you believe, as I do, that the scale of transaction volume could 100x or more, then those numbers really do start to add up. So it depends on the scale of your ambition. Does it matter to Solana if stablecoins 2x? Not that much. But if you think stablecoins are going to 10x and then transaction volume is going to 10x, then that really does drive a lot of revenue into ecosystems like Solana. And that's where my mind is at. That's the scale of growth that I anticipate in the space. There's this thing in crypto called the 4-year cycle. Historically, Bitcoin's moved in a 4-year cycle with 3 big up years and 1 big pullback year. We had pullback years in 2014, 2018, and 2022. The next 4-year in that cycle would be 2026. So according to the crypto's 4-year cycle, this year should be a terrible year. My biggest prediction is that that won't be true. And in fact, crypto will post strong double-digit returns, maybe even triple-digit returns, but strong double-digit returns in 2026. I just think the forces that are driving crypto now are different than the past. Their regulatory progress, their institutional adoption. They're not the forces that generated the 4-year cycle in the past. Things like the Bitcoin halving are less important. Things like interest rate cycles are less important. So my biggest prediction is the 4-year cycle is dead. 2026 will be an up year, and I think quite a good up year by the end of the year. Bitwise, when it builds products, tries to make them the easiest possible decision at every point. So what that means is the expense ratio is low. In the case of BSOL, it was the lowest cost Solana ETP when it launched. It means that we use the best-in-class service providers. So in the case of BSOL, Coinbase Custody, the largest custodian in the world, KPMG for audit, et cetera, gold standard all the way down. With assets like Solana, you can stake them and gain additional rewards up to and maybe exceeding 7% per year. But to do that, you need to either use an external staking service provider and external validators, or run that yourselves. We chose to run it ourselves. We're experts in staking. We have a large staking division, but also because specific to Solana, the way you run those validators can either be positive long-term for the development of the network or predatory on that network. And we wanted to run it in a way that we felt was very positive long term for the development of that network. So we partnered with a software provider called Helios, which we think is best in class, and ran it ourselves. But it zooms out to what I started with, which is we try to make our products best in class at every possible angle: transparency, custody, trading, liquidity, audit, validation, staking. And to do it best in class, we really felt most comfortable doing it with our own validator network.
Matt Hougan's message is ultimately one of realism, not hype. Crypto is no longer a fringe experiment. It is becoming financial infrastructure. That means returns will be earned through patience, diversification, and long-term conviction rather than speculation. The wild early days are over, but the real adoption phase is just beginning. If the past was about discovering crypto, the future is about building on it. And for investors who understand that shift, the next decade may still be one of the greatest opportunities in modern financial history.